After years of being barred from being treated as married taxpayers, same-sex couples who are married in a jurisdiction that permits it are now required to file their federal returns as either married filing jointly or married filing separately. Welcome to the land of the marriage tax penalty, or the marriage tax bonus. Which you'll face depends primarily on how similar you and your spouse's incomes are. The more alike, the more likely you'll be hit with the penalty, being required to pay more federal tax as a couple than you would if you were still filing single returns. Now, it's doubtful that switching to married filing separately will bail you out. That rarely works for anybody. The wider the spread between the spouse's income, the more likely you'll enjoy the marriage tax bonus. That means you'll pay less than if you were filing as single individuals. Although you are required to file as a couple now, it's up to you to decide whether it makes financial sense to retroactively choose that status. If you were married in 2010, 11, or 12, you have the option of filing an amended joint return for any of those years. If doing so would save you money, an amended return will serve as a request for a refund check from the IRS. Just be aware that the window for amending a 2010 return closes on April 15th, 2014. One final point. Although federal law requires you to file as a married couple, things can be pretty confusing when it comes to the state return. If you live in a state that permits same-sex marriage, you're sure to be treated as married for tax purposes. But if you live in a jurisdiction that forbids same-sex matrimony, you might be required to file as a single taxpayer, or you might be treated as married. Check the state rules carefully.